Why is inflation a risk to your retirement savings? Imagine planning for a comfortable retirement, only to find that your savings do not stretch as far as you hoped. This is where inflation comes into play. Inflation reduces the purchasing power of your money over time. As prices rise, the amount of goods and services you can buy with your saved money decreases. This can be particularly challenging for retirees who often relying on fixed incomes or savings accumulated over many years. Let's break down how inflation impacts your retirement savings. First, when inflation rises, everyday expenses increase. This leaves less disposable income to contribute to retirement savings. If you are unable to save enough before retirement, you may find your nest egg is not growing as it should. Next, many retirees depend on fixed sources of income, such as pensions or annuities. These may not fully adjust for inflation. Even Social Security benefits, which are indexed for inflation, may not keep up with all rising costs. This mismatch can lead to a decline in your standard of living during retirement. Investment choices also play a role. If your retirement savings are invested in assets that do not keep pace with inflation, such as cash or low-yield bonds, the real value of those savings declines. To protect against inflation, consider including assets that historically outpace inflation, like stocks or real estate. However, African American investors often face barriers to accessing these asset classes, which can lead to disparities in retirement wealth. Another important factor is the disparity in retirement preparedness. African American households generally have lower retirement savings and less access to employer-sponsored retirement plans compared to white households. This gap means inflation can have a more severe impact on African American retirees, as they start with less saved and fewer resources to adjust their investment strategies. Higher inflation can also lead to increased living costs, which may worsen existing financial challenges. For example, higher debt-to-income ratios are common in African American communities. This financial strain can force early withdrawals or loans against retirement accounts, further reducing savings growth. To combat these challenges, there are practical steps you can take. Prioritize contributions to retirement accounts even during inflationary periods. This helps maintain your savings momentum. Diversify your investments to include assets that historically grow with or faster than inflation. Seek financial advice tailored to address unique challenges faced by African American savers, such as limited access to employer plans or wealth gaps. Lastly, when planning for retirement, always account for inflation in your income projections. This helps avoid surprises and ensures sustainable withdrawals. Understanding inflation's impact is essential for building a resilient retirement strategy that can withstand rising costs and help secure financial stability in your later years.